Good to have everyone.
Yeah, so we're going to jump in here in just a minute. We're getting some streaming set up, and we're going to bring up our presentation here in just a moment. And we're going to talk you guys through getting started in multifamily. We want to paint the picture for you at a high level because so many folks get stuck. I was one of them years ago they get into investing in real estate, maybe in single family, and they kind of get stuck there. I spent probably a few too many years in single family because they're intimidated about the size of these projects, and they just don't know where to start. And you could spend a lot of time spinning your wheels, not knowing where to start. And so we want to help push people out of that and into this multifamily world that Abel and I are in and learn more about this stuff. So we're going to get a presentation here that we're going to share with you guys, and we will jump right in. Hang tight while we pull that up. I'll also just mention there's a Q&A box at the bottom of your screen. If something occurs to you, you have a question, anything Abel or I say during today's presentation, just pop it there in that question box. We'll handle all the Q&A at the end, but we like the Q&A, that we like the interactive part. So just keep in mind, if something doesn't make sense to you, any questions, there are no dumb questions here on this particular webinar today. And just pop them in there. We'll get them answered for you. So we've got some stuff coming up here. Abel, what's the latest in your world, man? I know we've been busy on our side with some projects. What's going on this week for you in the multifamily world?
Man, exciting time. Always looking for the newest next opportunity. So we got something under contract. We got another one that accepted an LOI. We're excited to continue moving forward on podcasts and had some great guests and any number of items that we have going on. We're launching I guess I can talk about one. We're launching a new fund.
Good.
So a lot of real estate and a lot of exciting stuff going on in multifamily. I heard you close something big, which I'm super excited about. Another opportunity there in the books, and just all good things. It feels like right now for multifamily investing. So I'm excited.
Outstanding. Yeah. Well, let's jump in. Abel and I are here on behalf of apartmenteducators.com. This is an education community that teaches you how to invest in apartments. So today's presentation is how to get started in multifamily investing. And we're going to paint a nice picture here for you. A little bit about Apartment Educators. Abel, you want to take this one?
Sure. Yeah, we love the Apartment Educators and everything that they're doing. I'm a coach and a member, and happy to have it. So Apartment Educators is essentially a coaching program that provides education, some mentorship, an opportunity to connect with, network, and partner with other individuals in our ecosystem. So anybody that's looking to invest, whether it's passively or actively, in multifamily real estate, whether you just want to put some money in and watch it grow and have somebody else work it, or if you want to be the person that actually goes and does what we're doing, which is buying apartment complexes and putting them together as investment opportunities for others. This is a great community, great opportunity to have them. So Apartment Educators are our official sponsors for our meetup. And if you have any questions, feel free, go to the website, apartmenteducators.com, and you can get a plethora of information. And we'll tell you at the end of this, at the end of the webinar as well, our next boot camp and some of our meetups. So we'll go into that at the end as well.
Fantastic. Okay. Agenda today, Abel, you want to cover this one?
Yeah. So essentially, like Devin said, is how to get started in multifamily real estate. So we'll introduce ourselves, myself and Devin. We'll talk a little bit about why we like multifamily as an asset class, and then dig right into the heart of it. We'll leave a little time for Q&A. As Devin mentioned, at the bottom of your Zoom, you should have a question Q&A box. You can put your question there, and whether we get back to the end, we'll definitely get answered. So let's keep moving through this, and maybe as we mentioned, Q&A box on the bottom. Feel free to use that, and I'll introduce myself first, and then allow Devin to introduce himself. So my name is Abel Pacheco. I am a commercial multifamily investor, full-time in commercial real estate. I'm a podcast host, commercial loan broker, and in addition, we invest in multifamily. So The reason we love doing these events is essentially kind of my background and story leads up, into love to serving and giving back and helping others. So I was a professional career in IT hosting sales guy for 13 years, 20 years of sales beforehand. And I invested in real estate since 2008, but it took me forever to buy a number of houses and build up a portfolio, probably 10 years to buy 8 houses. And then we went from single family to multifamily. We went from 800 doors in under 2 years by partnering with others and learning how to unlock the magic of multifamily syndication. So I was able to do that because of education, mentoring, coaching from other great individuals like Devin here, and essentially love giving back. So we provide this opportunity in our meetup to provide education, allow others to learn, and have an opportunity for other people to get together, network, all come together and partner, because we absolutely need to work with other investors and partners to do these deals. So it's team sport. So anyways, nice to meet everyone. Thanks for joining. And Devin, you want to introduce yourself, my friend?
Awesome. Thanks, Abel. My name is Devin Elder. I had a corporate career here in San Antonio, Texas after graduating college. And then I transitioned to real estate investing. And I started out with one rental house. And a few years later, last week we just closed a 400 unit apartment complex. And so that's the power of this business model. And a lot of that was through getting mentoring and coaching myself. And that's how I was able to accelerate my business. So now I'm a mentor and a coach, and we have apartment educators to help other people along that same path. So it's been very incredible journey for me, frankly, going from zero real estate to, being a principal in close to $300 million in real estate in a relatively short period of time. A lot of that was through coaching, education, and mentoring, and building the right network was a huge part of that. So that's what I'm here to do, is help you build your network and continue on your journey. And really, frankly, none of us have to be here doing this, but I'm always building my network. I want to find people to invest in their deals, right? I want to be a principal on other people's deals. I want people to invest in my deals. All of that stuff works well within the multifamily environment. And so I want to meet more like-minded people that want to go out and do good things. And that's why I'm here on today's call. All right. So why multifamily? I'll cover this just kind of at a high level, but there's lots of investment options out there. Stocks, bonds, cryptocurrency, whatever the case is, right? If you call that an investment. There's some fundamental reasons we like real estate that were good reasons in the past. They're good reasons now, and they'll be good reasons in the future. One is the returns. So we're getting cash flow out of these deals most of the time, which is really nice, because cash flow can buy you groceries. It could pay for your mortgage. It's spendable, right? So you can think about it like a dividend, which a lot of investments don't pay. So you're getting cash flow on a monthly or quarterly basis. And then we're getting equity in these projects, which is growing over time. So you're getting both of those things. So good returns, solid returns, one of the main reasons we are in this business. Multifamily can be a passive or active investment. I talked to a friend of mine today, had lunch with him, and he said, we're going to sell a rental house, and I think we just want to give the money to you to invest. That way I don't have to mess with any of it. And that he had a really good point. He's got a rental house. He said he had good tenants, but he's still fairly involved in that. Whereas if he puts money into one of our projects, really there's nothing for him to do. It is purely passive. It's great. It's a great deal. Or you can be active, like I am, like Abel is, right? You want to go run a deal and take it down by yourself and operate it and have even more equity and cash flow out of that deal and do all the work. That option is there too. And so there's kind of a place for everybody, depending on how active or passive you want to be. Usually say if you have more time than money, maybe you're a physician or something, high income, but not much time, passive investing makes a lot of sense. If you have more money than time, passive investing makes sense. If you have more time than money, you can be an active investor. Tax benefits. This one's huge, right? It's not what you make, it's what you take home. So if you have $1 million salary and no tax breaks, you're giving a lot of that back to the federal government, and a tremendous amount. So you want to try to find ways to reduce your tax liability, and real estate gives us some tremendous avenues for that. Finally, we got the safe asset, right? So we don't tend to think of real estate investing as gambling the way we approach it, which is fairly conservative, where we've got stabilized properties and cash flow. And the banks also share this view. They will give us 70, 75, 80% of the money for the deal because it's a stable asset. It's a real thing. It's tangible. It's land and a building and an income stream. Those are all very tangible things where you're not likely to see the value of that go to zero like it could on many other kind of investment vehicles. So good returns. It can be passive or active. You get tax benefits, and it's a safe asset. What's not to love? So who buys these buildings? Abel, you wanna cover this one?
Yeah, I love it. The fun part about this one is we do. So I'm an average, everyday, regular guy. I promise. There's no crazy trust fund behind me. There's no third generation family office or anything like that. I'm not an institution. I'm an absolutely everyday, average, general guy, right? And so we buy these apartment buildings. That's the beauty of this part, this investing. And when you do a multifamily or a syndication, when we're pulling a bunch of investors together and we all work together to go buy something bigger than what we would have been able to buy on our own, we end up putting together our money in a private deal. It's a private placement. So the easiest way to describe it to me was, any company that goes public goes to the SEC, they register, they go through this long drawn out process, and the SEC says, yep, you've got everything you need. Hundreds of $1,000s later, they go public and it becomes an offering in the stock market. Well, we do the exact same thing. We go to the SEC, but since we're a small company, small business, small us, regular everyday people, they know we can't create a security of an official drawn out something that's going to go on the stock market. So what they do is they give us an exemption, and instead of going public, they allow us to go private, and we create a private placement. Multiple people all pull our money together. We all put in a little bit, and we're all equity owners. So you've heard this term, or maybe you've heard this term, private equity. Well, private equity it's my money. I'm private equity, and we all pull together different private equity sources. So maybe, and this may be, when we say this word, don't think $1,000,000. It could be as little as $50,000 in investment. I'm in 50, someone else is in 100, somebody else might throw in 1,000,000, but for the most part, it's a lot of everyday average investors that are trying to put their money someplace different than just the stock market, someplace different than a bond that yields very little return, someplace different than a CD at the bank that pays you 1.2% interest or something along those lines. And we all pull our money together. So we buy the buildings, and then you do have other sources as well. Our competition, quote unquote, competition would be some of the larger institutions, or real estate investment trust, insurance companies, maybe some big businesses that all pull their money together, funds. But a lot of times, it's a private placement. One of the data points there was, we've heard, is there's more money in private placements than in stock today. So if you can wrap your head around that, and the stock market is pretty big, there's a lot more money in private placements. It's an everyday thing. So if it's new to you, just realize it's not new. It's been going on for a very long time, and now we have the opportunity to participate. Last thing I'll say is in 2012, if you've never heard about a syndication or a Regulation D 506B investment, in 2012, SEC changed some of the rules that made it easier for non-accredited investors, everyday average people, to get in a deal. And so they're open for you. The government wants us to take advantage of these and earn some money on our capital, our invested capital. So that's who buys these buildings. So we'll just keep moving through it.
Outstanding.
Yeah. So some of this how to get started stuff, right? I'll maybe start this one, and then Devin finish me off anything we missed. But 4 steps on how to get rolling into this. We try to make it as simple as possible, because this is actually there's a lot of information, but it's very simple. The more you learn about the business, you realize everything can be learned. What you do, number one, is get educated. You learn the steps. And how do I do that? You find other investors that are figuring this stuff out, and you can learn. We'll go through the how in a minute, but you get educated, you invest passively, put your money in a deal first and see what it's like. And then the next step would be partner with an experienced person, someone who's already done it, and then you can do your own deal. So these 4 steps to kind of running your own, we found it's very practical. It works very well. It's a track record or a path that a lot of other successful individuals that have done thousands and thousands of doors follow the same process. They learned a little bit first. They invested their own money in somebody else's opportunity to get their feet wet. Then they ended up being a small percentage partner with an entity or an individual that's already had a lot of success and track record. That was number 3. And then number 4, once you understand a little bit more, you put your money in, now you learn the process. Now you can go do your own deal. And this path has been one that's brought success to a lot of people. So Devin, would you agree on that? I mean, of all the people you've talked to, how does this work with a bunch of them?
A few years ago, I just started to notice this pattern over and over and over and over. And all these successful people that I wanted to emulate did the same thing, the same thing. So that's what I did, right?
Yeah.
You just copy success. We're definitely not reinventing the wheel in real estate, which is kind of nice and boring, which we like in investments. So this is it. We're telling you, this is the path, right? And there's you may have all kind of questions, and then that's great. That's why getting educated is number one. But this is the path to doing this business right here, laid out in black and white.
You told me that, Devin, and I was like, okay, well, let's go. Passive investment number 1, 2. Let's keep going. My wife as well. So same good stuff.
Love it.
All right.
So getting educated is the first step, right? We talk about that as kind of being the foundation here, because the last thing you want to do is go out half cocked and start trying to do deals. And there's a lot of nuance to this business. And a lot of it, frankly, is counterintuitive. It's not what you think it would be. And so, your reputation in this business, a very small world, is paramount. In any business really, but in multifamily, it gets to be a really small world. So you don't want to go out with some harebrained scheme and go start ruining your reputation. You really want to take as much time as you need getting educated first. Podcasts are a great avenue for that. Abel's got a daily podcast. He's got some fantastic guests, huge number of episodes. You could listen to the latest one and you can go back and you can have hours and hours and hours of education sitting in the room with really smart, successful people. I mean, it's almost like we don't appreciate that because it's free. You should like pay for that kind of access, right? So that's huge. I host a podcast every week, have great guests on there, almost all multifamily, and you can start learning the terminology and how people have been successful. Books are great too. I think a lot of us got into real estate being inspired by a book that Robert Kiyosaki wrote that kind of gave the framework of some of this stuff. But books are a great way to do it. And get started. Coaching groups is probably, if I were to point to anything that's been instrumental to my success over the years, it's peer groups. And so I've been in many peer groups. And the strangest thing happens, we just mimic our peers, good or bad, right? Whether it's criminals or whether it's multimillionaires, you start hanging around with them and you're going to pick up that behavior almost through osmosis. It's the strangest thing. And so I was very clear early on in my career about getting in the right peer groups. And frankly, I'm astonished at kind of some of the results in a short period of time by doing that. So you want to get in the right peer group. Finally, network. You constantly want to network. You want to meet new people. You want to be exposed to new ideas. You want to meet potential new business partners. You want to see how people are doing things, see if you could emulate it. And so you want to get out there and network. And so if that's a new skill for you, that's okay. There's avenues to go out and meet people. And that's something that you're always going to be doing is building your network. I kind of tell people that are starting in this business or that you've got your kind of hierarchy of important things. Well, the very first one is your network. for sure. And then number two is your skills and your resources. And you always want to be building your skill set. And then number three is your capital, right? And that's the third one. And so that should be kind of illustrative there, that the network is the number one thing that you want to focus on. So preserve your reputation, build your network, and that's going to be the most valuable thing for you in this business. So that's getting educated. And those are all easy ways to push the fast forward button.
Yeah, if I can add to on this
Please
one,
do.
Devin. So like, I don't know if everyone can remember one of their first jobs or their last new job you started. If it was a field or a position that you've never done before, it's a little scary because you don't know what to expect. You don't know what you're going into, and you got to learn on the fly. Well, that fear that you may have, or the concern or the worry, or just the unknown, right? It quickly diminishes the moment you've done that job 100 times. You've been there for a third of your year, a second year, a third year. There is absolutely no more fear anymore because you know what's expected of you every single day, day in and day out. And on the education side for this multifamily investing, it's almost the exact same thing. My first deal, my first investment, my first cycle was a little bit unnerving. It was a little worrisome, but then you start getting into the repetition and you learn from podcast, books, coaching groups, your network. And what ends up happening is what was kind of that nervousness at the beginning. It's like now you've got education to replace it. So you're no longer fearful. You get educated. Now your competence grows. And now that you're more competent, your confidence also grows. So it's a huge part. I love what you said around the networking side. It's the more people that I'm around that are doing this exact same thing. I realize, people go to work every day in this business and any other. And if I can learn it, then I can go do the same thing that other people are doing. So it's good stuff.
Love it. So that's getting educated. We'll talk about investing passively. And we kind of touched on this earlier, but why invest passively? Well, cash flow is a big one, right? Monthly or quarterly distributions, spendable cash coming off the investment. Then equity in the project. Over time, we make these things more valuable. There's natural kind of market appreciation. And then there's also things that we're actively doing to force appreciation and make these things more valuable. And as a passive investor, you're getting that advantage. Then you've got tax benefits. And then you've got really zero work. I mean, the work as a passive investor is getting educated and finding some sponsors that you like and trust and want to do business with. But really, once you invest in a deal passively, there's nothing to do other than take a K-1 form to your CPA every year and have them do your taxes with it, and hopefully see some magic on your tax return in terms of tax savings. But that's it. I mean, that's really why passive investing is attractive, because you can stack up. You can be at 20 passive deals and still be effectively retired, right? It's not going to require a lot of work for you. And so that's very attractive. And really, most of the way a lot of these deals are structured, the passive investors actually own most of the deal, right? I mean, they bring the capital, they own 70% of the project. The sponsor running the deal, doing all the work, they own 30%, which is great. But the passive investors actually own most of the project. So it's very effective leverage of the sponsor. You just put in your money, let those dollars go to work and bring back friends home to you. And that's a very scalable approach to this business as well. And you don't necessarily have to learn every single piece of the business. You could kind of learn the basics and meet with a team that you trust and let them be the experts. That's also nice too. So your learning curve is going to be less as a passive investor, even though we absolutely advocate getting educated as a passive investor. Once that's done, there's really not there's not a lot for you to do, which is the point of it.
Yeah. Yeah, I like one of the things I always think about too is Warren Buffett's quote: "If you don't find a way to make money in your sleep, you're going to work till you die." So,
Right.
I mean, if you're not figuring out how to invest for some returns later, that's literally what's we're going to keep working and working. And for those individuals that are high earners at work, man, God bless you and what you do. Make as much as you can. I'm not saying don't do that, But if you stop working, if that income stops coming in, that's where we need to turn on the passive income button to figure out how to take our active dollars that we're making actively at work, at our W-2, as a business owner. If you're a business owner, an entrepreneur, and you're cranking away, don't stop that. But the point is, pull some of that capital off the table and make it earn passively, so that at the right time, at the right moment, if something happens or you choose to stop, you can still create that snowball of revenue to really create active income or passive income for you. And it's earning on its own right. It becomes its own employee, and it's bringing home friends. I like the way you said that, Devin. Put it away and have it bring home some friends. So absolutely.
Love it. So let's talk about partnership. These are big deals, right? This might be a $5 million deal, $10 million deal, $20 million deal. I mean, some of these things get big, and you don't necessarily see a lot of people just going out and buying it by themselves. It really is teamwork to make the dream work. And so that's why we partner. We want to partner with people we know, like, and trust in order to go do deals that none of us could do on our own. And so we band together. It's like, why are humans successful of all the creatures on the planet? Well, we can work together pretty good. We can get rocks, and five of us can band together, and we could kill the lion, even though the lion was far superior animal to a human. Because of our ability to work together, that's why we're on top, right? So you want to learn to work together and partner. Partners are going to allow you to learn what you can't learn from podcasts and books, because ultimately action is where you learn about half of it. We can teach you absolutely everything about the business, and it'll get you about 50% there. Action and doing it is where you really learn the other 50. And I feel like it really is about 50-50, which is crazy. That means all your study and training really only gets you halfway there. You got to go out and do it to get the other half. You can learn in a safe environment without risk on your own deal. So this is why we laid out those steps earlier, right? And the last one was going to do your own deal. It's not go buy your own deal tomorrow, although you could. It's generally recommended that you learn and experiment as a passive investor with somebody more experienced first, so you don't have to learn it all and on your own deal. You can also test, if you have the desire to raise capital for a project, you can test that in a lower stakes environment, right? Maybe you're going to come on and partner with somebody that's more experienced and bring some capital from your network to the deal. And there's certain ways you have to structure that to be in SEC good graces there, but you can test that in a smaller environment without going to say, hey, day one, we need to raise $3 million for our first project. That might be kind of intimidating. You can break that down into smaller chunks. Then you can get experience as a partner for loans, which is going to help your resume, which is really important. You're also going to get experience with credibility for brokers and lenders and everybody in the business. And so you can basically piggyback on the experience of a partner that's further down the road with you. You can bring some benefit to them, and you can get benefit along the way. And that's a big reason to be able to partner here in this business. Abel, what do you think?
Yeah, I think everything you mentioned is spot on. Let me go back to my intimidation factor. For me, was I had a limiting belief, an obstacle or a barrier in my mind from the first time I did my first real estate deal in 2008, and I had read more than a few books, and I knew I wanted to invest in apartment buildings way back then. But something told me, that little voice, that fear voice, said, you can't do this. You're only 26 years old. The first time I read one is, okay, I kept that same mindset for however many years, 10, 12 years. And that limiting belief was finally broken down the moment one of my partners, a peer group, somebody in my network, somebody I knew I could relate with, was doing these deals. And I go, okay, if he can do it, so can I. And it took that moment of partnership for me to even be able to say, yeah, I can play in this arena. And so you sometimes your partners are going to be the ones that'll stretch you and push you you just by doing what they're doing. So when you hang around enough of those individuals, kind of like on the network point that we said earlier, but when you work with and try to partner with and go, figure out how to create something together, you can do amazing, massive things together as a group with the right team. So it does play a huge part into what's possible. If somebody's already been there, done that, they already know what the next steps are. They can lead you and guide you. Just a simple question or two and being able to ask where you're not going to get that from a podcast. You can watch 100 and something shows on Devin's or I's podcast, but you're not going to be able to ask that question. What's the next step on the book? The same thing you need to get out there and go do. And having a partner right by your side will definitely help you. And then, pulling together resources. Somebody may be better at financial analysis. Somebody may be really good at the numbers, really good at breaking this stuff down in terms of assumptions and metrics and your mechanics, and having a make sure your Excel analysis are really crisp. And then some people may be better at talking to 100 investors to bring in a few $1,000,000. So when you partner and pull those resources together, you're pulling skills, time, effort, energy, and then also I think on the vendor side, we want to pull the best possible experts to run the deal, manage it, CPA, bookkeeping, operations, construction, all that good stuff. So anyways, yep, partnering is absolutely amazing.
Love it. Love it. Yeah, there's something, Abel, that you mentioned. It's about being kind of in the presence of others that are doing it that is irreplaceable. It's just human nature. It's monkey see, monkey do. And sometimes when you see somebody do it, it just creates that confidence and belief in yourself that you can take that next step. And this is really, if anything, that's kind of your job, is to get educated in order to have the confidence to take the next step. Because fundamentally, like, you talk to people that have been doing this a long time, it's not rocket science, right? We're not building a rocket to Mars. We're not operating on somebody's brain. Pretty simple. You got some loan, you got some equity, you get some cash flow, but getting that education and confidence to take the next steps, really important. And there's no better way to do that than by associating with people that are already doing it. So this is kind of the last step here, doing your own deal, right? We talked about investing passively and partnering. To help a more experienced sponsor and add value. And finally, kind of the last step here, do your own deal. You go out and buy a $10 million building. And some steps here, you're going to need to build your team. So at a high level, you need a property management company. You need an SEC attorney to handle all your capital raising. You're going to need probably a loan broker to help interface with the banks and get you the best deal and make sure that deal closes at the terms that you need it to close at. You're going to need your team internally. Maybe that's folks dealing with investor relations or underwriting. Maybe you've got a business partner. So those types of team members. Broker is going to be very important team member, making sure you get deal flow. And who am I leaving out? You're going to need insurance, right? And you're going to need investors. That's going to be those are going to be a huge part of your team, is who wants to put capital into your deal. So you need to build your team and build your relationships, and especially build your relationships with brokers in order to get some deal flow. And by having this team approach, you're actually going to be able to get deals across the finish line. And without that team mentality, it's going to be very difficult. So if you've been out there flipping houses or doing other stuff on your own, sometimes that transition to that team mentality is difficult, but it works. And once you kind of accept that, then you're just always working on building and fine-tuning your team. So that's kind of, I don't know, Abel, if you have any thoughts or if I missed anything on that.
Yeah. Once you're past those three, you don't need us to tell you. You're going to want to go do your own deal and go lead it. So if you can get educated, if you can invest a little bit of your own money in someone else's deal, and then you can be a small percentage partner on someone else's deal and kind of work together, you realize, oh, the tracks are already laid. Let's go. Let's keep moving forward. So right. Yeah, it's going to be a good one on this. What if I don't have capital? Well, this is going to be a fun one. Right. Right. Man. Well, let me start, Devin, since I'm talking on this one, man, I don't have $10 million to go buy a $10 million deal. Like, how the heck do I do that? This goes back to the first part. What happens is if you were to lay all those pieces that we just talked about, you get educated, you build a network, you start to learn, you invest passively. Let me just stop there before you even a small percentage partner in somebody else's. What I did was I was so excited to get in my first passive investments. I started telling all of my network, all of my friends. I didn't purposely do it. I was just kind of excited. I put it on my social Facebook page. I put it out there. I told my family and friends. I was like, I bought an apartment complex, and the more that I started telling people that I invested in it, I'm a part owner. I'm working on my returns. I've transitioned from investing in single family houses to doing it passively in multifamily. I started telling my coworkers at work, my friends, and essentially what happened was other people wanted to start, doing what I was doing. So they asked me how they could get in, right? So that was one of the first parts. So when you're raising capital, it doesn't really have to be like you're making a thousand outbound calls to strangers. It's just sharing this is good news, I would say, with people that are around you already in your network. And naturally what happens is you're going to have people that gravitate towards that and that want to learn how to do exactly what you're doing. And just by sharing your experiences, moving a 401k to a self-directed IRA or solo 401k, redirecting some of your retirement funds, it may be one example. Now you're the expert in that arena because that's what you've done, and you're sharing that insight, and somebody else goes, I didn't know I could do that. And now you're helping them along. And what really happens is you're just educating others on the opportunity, and they want to invest. So I would say that's one of the first parts to raising capital is just sharing the story with other people, and they're gonna join in. And what happens is, you may be able to at some point get to a position where you can have 10 or 15 people that want to put $50,000 each in. Everybody likes it, and now you've got 500,000, 750, maybe $1 million that of unexpected capital that can be invested in a deal, but that may not be enough to do your own. So that's kind of why we build a team to help. There might be 2 or 3 others that are just in the exact same position you are. And now we've got $3 or $4 million together to go do that. Right. So the last one I'll talk about too is, before we're turning it over here, maybe Devin can give us other insights, is as a key principle. So, so I'm a commercial loan broker, right? So I help people get loans for these deals. And one of I guess some point to demystify for you would be, what does it take to get a loan? Well, if it's if it's a $10 million deal, you're going to need net worth on the general partner team equal to the value of the loan. So if the loan's $8 million, then you need general partners or team members that have $8 million of net worth between each other. So that could be $2 million net worth, or an $8 million net worth individual, and you, which is maybe not be a net worth millionaire. So that's a way you're pulling capital together. You also need 10% of liquidity of the loan amount. So if it's an $8 million loan, you need 800K of liquidity. Well, maybe somebody does have $8 million in net worth and you have good liquidity, and you might be able to partner together. But ultimately you're trying to bring maybe a key principle, and their role is sign on the line, help you out with the net worth, liquidity requirements, probably experience, and they share in the opportunity, they share in the risk as well. So if I don't have capital, those are some big ways. Devin, please add here. What if I don't have the capital to do this monstrous $50 million deal in some cases?
Yeah, I mean, 50, you're probably not starting at $50 million, but you can get there.
Yep.
What's interesting, I've found just kind of socially, you start talking about real estate, everybody's interested in it, right? Everybody wants to understand how they could kind of participate in this. So I like your point earlier, Abel. You're never really selling anything. You're just kind of talking about what it is we do, and people can self-select and opt in on their own. There's never, in fact, if somebody's talking to me about one of our projects and they're like, I don't know, I really don't like this, I just say, just stop right there. Just don't do it. If you don't love this idea, don't do it. And if you're just newer to it, continue to get educated, listen to podcasts, meet people, but don't force your way into a deal if you don't have a good feeling about it. But there's, again, back to the team approach. there's so much capital out there that's looking for a safe home. And that's what, when we run these deals, that's what we're doing, is putting together a safe home for this capital to be preserved and to grow. So you really just need to connect people to it. And so that's how you can go further faster, is by leveraging OPM, other people's money, right? And other people, if you structure the deal the right way, other people are going to love being in the deal. And it's a total win-win scenario. And when you structure things win-win, everybody wants to go do it again, right? So that's how you want to approach this business, is with a win, everybody wins mentality. And then there's just lots of different ways to participate too, depending on, if those folks that have a high net worth, they've done something in their life to get that, in most cases, right? I mean, maybe they inherited it, but a lot of folks have sold a company, or worked in a corporation for a long time and saved up a lot of money. Those types of folks, a lot of times, they don't want to go do all the work again. They just want to preserve it and grow it. And so you're really solving those people's problem. And I think that was a big turning point for me when I realized that, gosh, there are a lot of people in the world that have this problem of, what do I do with all this money? And it sounds silly, but that's a legitimate problem. If you're sitting on $1 million cash, that's a problem, because we have inflation, right? And you could, where do you give it to a money manager that's going to charge you whether it goes up or down? Do you invest in something risky like crypto and hope you get lucky? Do you day trade in the stock market? Do you go online and try to find some investment? I mean, it really is a conundrum of, where do you put this capital? And so you're solving that problem for a lot of people. And because of that, you effectively have unlimited capital for your deals if you structure them correctly, because this is all about solving problems. You're solving problems for somebody, those people that have a lot of capital and need to place it. And that's where you want to end up too. You want to end up in the situation of, what do I do with all this money? And you want to be in a situation, be educated to be able to deploy it smartly, have it be preserved, and have it grow.
There you go. Yeah, it's good stuff.
So we can talk about how to find a deal, and then we'll wrap it up here shortly after. I talk to you guys about some exciting events, but in multifamily, especially larger multifamily, it's really going to go through brokers. It's like an 80-20 rule. You could spend a lot of time and energy mailing postcards and calling owners and stuff like that. And a year later, you might not have a deal, right? So better shortcut is to build relationships with brokers. You can find deals off market. This tends to work, in my opinion, on smaller deals. If you're looking to go buy a 5 or 10 unit, you might be able to work directly with the seller on that. Or you can partner. Abel can go find a deal, and maybe I'll just partner with him, and he already found the deal. And then we could figure out a way to work together that's a win-win for both parties. Now I don't have to worry about finding the deal. So that's how you find a deal. I would not recommend finding deals by cold calling 100 owners with no credibility. That's a broker's job, and they work hard all day, every day on that. So let them do their work and bring it to you. All right, so let's move on here. If we have any Q&A, put it in the chat box. I'm just going to move on, though, to talking about our events. So please put Q&A in the chat box if you have it. But let's move on and talk about our events here. And please just type in Q&A if you have it. We've got our multifamily summer boot camp coming up. We're extremely excited about this. This is something that I wish was available for me a number of years back, because we're going to cut right to the chase and show you exactly how to go do this business and shave years or decades off your learning curve and compress this time frame. So you're going to learn our exact business model. You're going to network and mingle with like-minded investors. We're going to provide food and drinks for you. If you sign up for the boot camp coming up on June 26th, you're also going to get a year of access to the Apartment Educators online platform. There's all kinds of templates, videos, content, really kind of spelling out the business model for you. You're going to get access to that for free for a year. And you can sign up at apartmenteducators.com/bootcamp. This is a very, very reasonable event. But there is nothing like being live in a room, interacting with people that are actually doing the thing you want to do. There's literally nothing you can do to accelerate your success faster than getting in the room with people that are already doing what you want to do. And so that's why we created the boot camp. It's going to be a great environment. If you're in San Antonio, great. We'd love to see you. If you're in Anchorage, Alaska, or you're in Boston, you want to learn this stuff, come to San Antonio, Texas. We have a beautiful city. There's stuff for the kids to do, lots of tourist destinations, great restaurants, all that kind of good stuff. Come down to Texas, and we would love to be your host. And if you're already here in San Antonio or in the Texas area, you're close by. It's going to be a fantastic event. We're going to show you the whole business model, and we're going to get you kicked off with building that network too. So that's the multifamily summer boot camp. We also have June 22nd. We've got an in-person meetup. So we're back to in-person meetups. Our last one was fantastic, very well attended, rave reviews. And then June 26th, we've got the multifamily boot camp all day. We'd love to see you there. Also, if you're not already on there, join our Facebook group to see all the latest up-to-date informations. You can just go to Facebook and search Apartment Educators, or you can go to apartmenteducators.com/FB group. So join the Facebook group, come out to the boot camp. We're going to have a great time. You're going to push the fast forward button. It's extremely reasonable. I think it's like a couple, $200-$300 to come to the event. I don't know if the early bird pricing is done yet, but even if the early bird pricing is already all sold out, it's a very, very reasonably priced event to get to. So come on out and join us. We'd love to have you. Okay. Abel, any closing thoughts here?
No, I love your thought on the boot camp too. Just the last one on our last in-person meetup. So, which is our first one since, pre-COVID, right? We had 65, maybe 70 plus people in the room. Right. And the question we asked was, who's been to a multifamily meetup, a boot camp, a conference of one type or another, and a good number of hands were raised. And we said, well, has anybody ever attended a meetup or one of these events where you haven't met a new investor, created a new opportunity, or met somebody there that opened up a new opportunity for you? And, everyone was an outstanding. I've always met new investors, a new opportunity, and created a new partnership at every single event they've gone to. So I would absolutely encourage you. And to Devin's point, Texas, we're open. So if you want to come and you're in somewhere that's not quite open, you can have a great time here on the Riverwalk or any number of tourist attractions here, the Alamo and all that kind of stuff. So hope to see you here, and we're excited to have you at the meetup on the 22nd and then the boot camp on the 26th.
Outstanding. Well, thanks for jumping on, guys. On behalf of myself and Abel and Apartment Educators, we applaud you for taking steps in your education, and we'll look forward to seeing you at the boot camp on the 26th. Have a great afternoon, guys.
Bye-bye. Bye, everyone.